types of insurance does my small business need? Welcome to part 2 of our small business insurance primer. In the last video, I went through some key terms and fundamental concepts applicable to business insurance generally. Today, we're going to get into specific types of insurance products. By necessity, today's discussion is going to emphasize breadth over depth. My goal here is to give you a very quick review of the types of coverage out there and the circumstances in which it might be necessary or prudent for your small business to obtain it. You can use this information as a springboard for conversation with your own legal counsel or insurance broker or advisor, but not as a definitive plan of action for what you need to do. Commercial general liability. Let's get started with the big daddy of business owner insurance policies, which we already discussed a little bit in the first video of this series. Almost all business owners should consider whether they need a commercial general liability policy. Despite it being called general liability, you'll still want to review the declarations page to determine what types of incidents are included. But the basic idea is that you'll get broad, if not totally comprehensive, coverage for all types of incidents that a business might face within a single policy framework. So, for example, rather than incurring the complexity and cost of individual policies for contractual liability, premises liability, product liability, and property damage, these all might be inclusions under your commercial general policies terms. But you must check the declarations page and your specific policy terms to determine what's included. If you're not sure, ask. Commercial property insurance. This protects your business's real property, like a warehouse or a small office building that the company owns, and tangible property like your equipment, furniture, or inventory, against loss or damage from fire, theft, vandalism, or similar such covered events. This policy is prudent if your business owns or leases office space, factories, warehouses, or retail stores, or if you have physical assets like major machinery, expensive fixtures, or significant inventory. Inland marine insurance. If part of your business model involves regularly transporting property to and from job sites, bringing your wares to trade shows and exhibitions, or storing goods off-site, you might want to look into something called inland marine insurance. The name is confusing, but it actually has nothing to do with the Marines like the military or Marines like oceans and seas. It covers items that might otherwise be excluded from your standard property insurance policy, which is typically tied to set and specified business addresses or locations. Workers' compensation insurance. Now, in most states, workers' compensation insurance is going to be a requirement if you have even a small number of employees. You need to check the requirements of any state workers' comp board in which your company has employees located to be sure. In Georgia, for example, any business with 3 or more workers, including part-timers, must have a workers' comp policy. Coverage provides medical, rehabilitation, and income benefits to workers who are injured on the job or to a worker's dependents in the event of a job-related accident that results in death. Professional liability insurance. This is also known as an errors and omissions or E&O policy. It protects against claims of negligence, mistakes, or other failures to meet professional standards of quality or competence. Many times, professional service-based businesses are required by the state governing board to have coverage. But even when it's not mandated, most lawyers, accounting firms, medical professionals, engineers, architects, and consultants tend to opt in. Business interruption insurance. This provides coverage for lost income and operating expenses if your business is temporarily unable to operate due to a covered event like a fire, flood, or natural disaster. Much like product liability insurance, the necessity or usefulness of this coverage is specific to certain industries. In this case, those that are heavily dependent on operations at a physical location to generate revenue, such as factories or hotels. Cyber liability insurance. Now, this is a fascinating product, or at least as fascinating as an insurance product can be. At the beginning of my career, it was rarely mentioned, and the market for it was bizarre. Ridiculously low premiums, but also wildly inadequate coverage. Now, eventually premiums rose to the point that some industry professionals suggested that you were actually better off using that money to beef up your cybersecurity practices in lieu of obtaining coverage. Now, that opinion still persists in some corners, and the market is still relatively small and evolving, but I've increasingly seen cyber liability insurance becoming a non-negotiable or a barely negotiable requirement in commercial contracts across a huge range of industries. These policies protect against damages from data breaches, malware attacks, hackers, and a variety of other network and technology related risks. You should expect the insurance provider to have very specific requirements as to technical safeguards, practices around identifying and remediating security vulnerabilities, access controls, and even employee training, which your company will be required to achieve and to maintain as a condition of coverage. I'm intrigued to see how this market will develop, especially as more and more companies are handling, storing, and using sensitive customer personal and financial data through electronic means. Any company that is predominantly reliant on technology and online operations should have this coverage at least on its radar. Employment Practices Liability Insurance. EPLI covers claims arising from employment practices, such as allegations of wrongful termination, discrimination, and harassment made by current and former employees. Any business owner or executive that's been involved in an employment discrimination lawsuit will tell you the process is stressful and time consuming, even when you ultimately prevail on the matter. And while sound, equitable, fairly applied employment practices and procedures can help mitigate the risk of an incident and can potentially help provide a defense in the event discrimination is alleged, there's nothing to stop an employee who believes that they've been aggrieved from filing with the EEOC or initiating a lawsuit against you. EPL insurance alone won't prevent discrimination allegations or resolve a toxic company culture, but if your business has significant HR operations, numerous employees, and frequent job turnover, or if you've faced employment claims in the past, this may be worth considering. Commercial auto insurance. Now, this one is pretty self-explanatory. Similar to personal auto insurance, it provides liability coverage for vehicles owned or used by company in the event of an accident that causes property damage, personal injury, or death. If you own a fleet of vehicles, like for a delivery business, a transportation company, or a plumber, pest control, or HVAC tech business that sends company vehicles to client locations, of course, you'll need to obtain this coverage. And if your business model requires employees to use their personal vehicles for work-related tasks, you'll also want to ensure that coverage extends to those activities as well. Product liability insurance. Product liability insurance covers your business if products that you manufacture, distribute, or sell are alleged to cause injury or harm to consumers. This type of coverage is imperative if you're dealing in products with the potential safety risks or likelihood of defects, perhaps less so for other types of products depending on your level of risk aversion, margins, and many other factors. Key person insurance. The general purpose of keyman insurance is to provide a financial cushion in the event of the death or disability of an executive level employee whose sudden loss would have a significant negative impact to the business's operations or revenue. They are a person who is key to the company's ongoing success or viability. I've dealt with key person insurance frequently in the context of advanced business succession planning, particularly with successful small businesses with 2 or 3 co-owners. If you've heard about using insurance proceeds to fund the buyout of a deceased co-owner's shares, I urge you to retain counsel to assist you with this, as there can be significant but avoidable tax consequences when it's set up correctly or incorrectly. Directors and officers insurance. This protects a company's board of directors and officers in their individual capacities if they are sued for decisions that they make in good faith on behalf of the company in that role. For example, if they're sued by investors who are displeased with the outcome of a decision made by the board. When I have a client that's been invited to join the board of directors of another organization in his or her individual capacity, I ensure that the company maintains D&O insurance, and I have that obligation written directly into that client's board member agreement as a standard and non-negotiable condition of acceptance. This is almost always a non-issue, as most publicly traded companies and major nonprofits obtain it as a matter of course. Home-based business insurance. If you run your business out of your home, your personal homeowner's insurance policy might not cover incidents arising out of the operation of your business. Home-based business insurance can cover that gap. For example, if your garage or basement is stuffed to the brim with your business's inventory, or if you're a therapist who's converted the sunroom in the back of your house into an office in which you see patients, any sort of accident, damage, or liability that occurs as the result of these home-based business operations might not be covered under a standard homeowner's policy. Umbrella or excess liability insurance. Now, the concept is the same in the business context as it is in the personal context. An umbrella policy provides you or your business extra coverage beyond the coverage limits of your primary policies. It's basically a safety net to provide extra protection against a huge claim that would otherwise exhaust your primary policy coverage and leave the company's continued viability at risk. My most risk-averse clients love these policies irrespective of industry. For the rest, the relative necessity can depend on industry-specific, company-specific, and owner temperament-specific factors. M&A insurance. M&A insurance usually refers to a representation and warranties insurance policy. That is, a policy designed to protect the buyer against losses resulting from inaccuracies in the seller's representations and warranties, which are a fundamental part of the purchase agreement in the context of acquiring the seller's business. So, if the seller warrants that there is no pending or threatened litigation against the company, and then 3 months later, the buyer discovers that in fact there are 2 pending lawsuits and 4 more that have been threatened over the prior year, this policy can help cover financial losses to the buyer resulting from these undisclosed liabilities. This may be especially important if the seller is insolvent, there was no purchase price escrow, or the purchase price was otherwise paid in full at closing with limited opportunity to make adjustments or claw back later on. There are also M&A policies dedicated specifically to tax liabilities. Now, with all that said, my current firm focuses on smaller stock and asset purchase transactions, generally under $5 million, meaning that these insurance products are usually totally cost prohibitive for my client base these days. If you're a larger company doing a distressed deal, though, it may merit a conversation with your attorney. One final but critical note. You can load up on coverage only to have a client or supplier or contracting party require that you have additional or different kinds of coverage as a condition to doing business, or minimum coverage limits that notably exceed what you have for those policies that you already have in place. Sometimes these requirements can be negotiated. Sometimes you can get an endorsement to existing policies to placate that other party. And sometimes you may need to shop new coverage or opt out of the opportunity entirely. Unless and until you've gotten comfortable navigating this terrain on your own, you should enlist the help of your lawyer or your insurance provider or both to help you determine what your best and most cost-effective options are. Business owners, what did I leave out? What types of business insurance policies or topics would you like to learn more about?